What's up, you guys? It's Matt here. So another video on AMC today. I wanted to talk exit strategies. I know a lot of people have talked about this in the past, but we need to break this all down from my perspective, understand where I'm coming from. I think it would be great if we just had a full video, really a full live stream on just talking about exit strategies, because it's the most important piece, right? You can get into a stock all you want, but exiting the position is the most difficult part, whether you're talking about AMC, Ethereum, Dogecoin, whatever it ends up being. It's the most difficult part of investing because it can be like very crucial to gaining a profit, losing some, breaking even, and time, the way that you go through that, typically time will be a factor. And we're going to talk about all of that stuff in this video. What's really the best strategy? And I'm not really going to go through exactly what my numbers are when it comes to the strategy, but we will break down what will be the best strategy so that we don't derail the squeeze too quickly. We also don't, have everybody sell on the way down. There's just a lot to take in there. So before we get started in this, make sure you guys hit that like button. Also hit the subscribe button for more videos like this one, and make sure that you get your free stocks with Webull down below. Don't forget to check out some of the other links if you want to join as a channel member or join the Discord group. Those links are in the description as well. So let's talk about exit strategies, right? When we get up to these peak points, and I'm not saying that we're at the peak points now. When we get up to the peak points, let's just put this in a simulation right now. We're looking at this right here on the screen, saying that 72 is basically the high, right? That's where it's going to get to. Now, if we say that 72 is equal to 72,000, then we'll understand that. So let's say that the 72 is the highest point, and we're seeing that build up before we see the fall or whatever. Now, exit strategies are tricky because I've heard from a number of people and that everybody's going to sell on the way down. A bunch of people are like, oh, I have 20,000 shares. I'm going to sell on the way down. I have 30,000, 50,000 shares. I'm going to sell on the way down. I have 5,000, 10,000 shares. I'm going to sell on the way down. Now, understand what that does to a stock when everybody sells at the exact same time. Just imagine if you went to the bank right now and you wanted to take all your money out. Would you be able to do it? Probably. Now, just imagine if the whole city came to that same bank and said, I want to take all my money out. Would they be able to do it? No. It's going to freeze a lot of different things. So what we need to understand is what will be the best situation where we don't create too much activity so that people don't miss out when it comes to the brokerage accounts stopping things, when it comes to the amount that it's falling because of the amount of people that are selling the position. What actually happens there? Like, when do we make this move? Because if we see all this negative side on the front side and we see all this negative side on the back side, or on the front side, we see them on both sides. What are we going to do here? So what I like to do is break this all down, understand the build up to the squeeze. So the build up to the squeeze is going to be basically two factors, right? One is going to be the retail traders. Actually, you know what? Let's put it in a three. So I would have just broken down to retail traders and to hedge funds covering, but let's break it down into three, right? So we have the retail traders pushing into this position. Then we're going to have the institutions and hedge funds that want to buy into the position in order to make a profit as retail traders are making a profit. Then you're going to have the hedge funds that want to cover their positions and continue to drive that price higher and higher. Now, looking at those three sections, you're going to understand that right now we're really in that retail trader phase. We do have some institutions that are into it. We have some hedge funds that are also into it as well. But we would say that majority of the people that are holding are retail traders, are apes, are the people that are looking to gain the most out of the situation, which are great. But when we start having that large bit of buy, whatever is left, institutions will want to buy up as we start to see that squeeze start to happen, right? So when we look at it this way, a lot of people can take this into account and say, look, I'm not going to go for greed. I'm not going to go and try and get the max amount that's up here. I'm not going to look in order to sell at this top point up here. So I'm not going to look to take everything out at this top point because it's going to be kind of impossible to take it out at that top point. So what you're going to do is you're going to see that there are different levels here. Let me actually break this down. So there are different levels here. If I wanted to draw something here to go here, let's say that that's the first level. Retail traders end up pushing it up over $300. So let's say that's $300 there. Then we end up seeing the institutional investors push it up probably to somewhere around that $1,000 mark, $2,000 mark or so. And then you see the hedge funds really start to push that thing up even higher, really making that jump, really making that squeeze. So it's pushing it up from $2,000 all the way up to, let's say, a max of $10,000 or $100,000, right? They're paying a massive amount for it. Now, what you can take from this is obviously have it in different sections and understand that you have different points to where you want to maybe take some off the top. Maybe after this section, you could say, all right, it got to $200. Let me go ahead and take maybe a little bit off, right? That doesn't derail the squeeze because it's a very small amount that other retail traders will buy up, or institutions will actually buy up on that second level. Then what you could do is say, you know what, I want to trim some off on the way up here, maybe 20 shares there, maybe 20 shares there. Yes, you won't get the full max of selling up here, but you also won't derail the squeeze, because just imagine that person that has 10,000 shares down here, they don't sell here, they don't sell any here, they sell all of it here, 10,000 shares, and then you allow those shares to go directly into the hedge fund's hand and pay less for it because more shares are out there. So this is what I'm struggling with understanding, is why everybody's saying, hey, you know what, let's sell on the way down. Because if you all sell on the way down, it's basically like going to a bank and asking to take all your money out. That bank will be bankrupt. It will lose all the money that it's had in there, and it's physically impossible for them to be able to do that. They don't keep that much in the bank anyways. So ultimately, you're going to have a lot of struggles on the way down if you end up doing that. So this is why I say that the best bet would be to do some sort of staggered method, whether it's a staggered method up or even finding a way to do maybe a little bit of a staggered method down. But I can tell you that I'm not going to tell you exactly where my points will be and where I plan on holding till, but I can tell you that when I get to this peak point, I will have 10 to 100 shares. That's it. I will not have a lot. I'm not looking to pull out a crazy amount up there, because greed is not something I'm into. I'm never into greed. I know that I can make $1 million. I know I can make $2 million. I know that I can make that money work for me. So what I'm saying is that give everybody else a chance in order to make that money, because what we're going to see is whales get up into this point and they're just going to sell all of their position. And what's going to happen when they sell all of their position? You're going to see this. No angle to that. No angle to that. It's a complete downward turn that we're going to see with that position. And I want to make that known that we are going to see this go straight downhill if we see whales and retail traders start to exit their positions at a high rate up top. Now, people are saying, hey, wouldn't this derail the squeeze up top if we actually do that? Well, no, because you think about it, if you have the three sections of retail traders, institutional traders, investors, and hedge funds, and then you also have these hedge funds, the hedge funds that shorted that they need to cover, right? You have multiple sections to where you can actually get positivity and someone else in the next section to buy up your shares. So let's say that you're comfortable with it getting to $100. You put in $20,000 in the beginning, you're comfortable with it getting to $100, and now maybe you sell a good 100, 200 shares, right? That is going to be eaten up by the next level and even this level. We're currently still in this level to where retail traders are buying in a lot, and FOMO buying is actually happening. So when we look at that and we say, okay, I sell 200 shares, maybe other people sell 200 shares, the institutional investors are going to want to have as much as they possibly can, right? Because they have a lot of money in order to buy this up in order to make some money out of it. And the hedge funds also as well, the hedge funds that are really on our side. So we're going to look at this as a full squeeze potential. Now, there are probably going to be some people that continue to hold on and continue to do all that and sell at the top. But the less we have that end up selling directly at the top or selling all of their shares at the top, the less likely we will see that completely drop downhill. Do you know what I mean? The more people with less shares, the better the situation is. The reason why is because if a small amount sells their shares, it's easy to cover that small amount. However, if 10,000 or 100,000 shares up here sells, then it's going to be very difficult for 100,000 shares to get covered at $10,000, $50,000, right? So it creates a larger squeeze as you're starting to see this go up. And I feel like that is the best method to look at it. And, I may be wrong by your standard. I understand if you do want to sell completely at the top, and the human race is known to be greedy. This is why a lot of people end up failing in the stock market when it comes to day trading and swing trading. They're very greedy, and they're very stubborn. So people that see a stock price go down, they're going to more likely hold on to that position to wait for it to go back to break even rather than accept a $30 loss. I accept a $30 loss all the time. I can have $130 losses, but you know what? I end up making thousands of dollars on the other side with my positive trades. So that's what I'm saying. You need to understand how to not be greedy. Take what you have, and not saying take everything, but you can profit a little bit, trim some off the top. That's the way that you invest. Nobody can predict where this exactly will go. So if nobody can predict where the top will be, how will we know where the top is? I'm asking you. I mean, I guess it's a rhetorical question because, you can't answer me right now, but you can answer me in the comment section. So who defines that it's at the top? Is it the hedge funds? Is it the whales? Is it us? You have to know that it's the people that are holding the most shares, the whales. The whales define where the peak point is. If you have the largest whale there basically saying, I'm going to sell at this price, which they will never let you know when they're going to sell, they're going to sell that price, and it's going to fall down dramatically because you have a lot of shares that are going through the sell side. So that's why I wanted to, put emphasis on this, is that you don't define where the peak point is. Us as a group, we do, but when it comes to the people that are going to define exactly where that peak point is, it's going to be the whales. So you'll notice that they will never tell you exactly where they're going to sell, what price point they're going to sell at. And if they do, then what you're going to see is a lot of people sell off before that. So like, say, I'm not saying that Trey's a whale, but say Trey tells you he's going to sell his position at $5,000. You're probably going to end up selling maybe around $4,000 or so. If you're smart, you would sell right below that so that you don't have to worry about any type of fluctuation. However, people are not going to tell you exactly what their numbers are. If they are a whale, they're not going to tell you exactly what their numbers are. And I'm not saying Trey's a whale. I don't even know how many shares he has. I think he has like 5,000, but like 100,000 would be considered like a whale, But yeah, that's where I'm going with that. Hopefully this video was not just, long-winded. And if you feel some type of way about where the exit strategies can go, how you feel about, maybe selling a little bits and pieces versus selling a lot, you have to understand that if everybody goes to the bank at one time and tries to get their money out, it's going to bankrupt that bank. You know what I mean? And the bank is not going to be able to hand out money to everybody, so it's going to freeze. So all of these brokerage accounts that we're on, it's going to be something to where they stall, where they stop, buy and sell orders because they can't handle all of the traffic. And we need to understand how you can be profitable from the beginning. So whenever you do sell, you don't lose out on, hundreds of thousands of dollars, because as it does get to the top, that's exactly what's going to happen. So, this is my plan. I won't tell you exactly the numbers, because telling you the numbers is just not something that you should ever really do of where you are. But I think it's a good strategy to understand, because exit plans are very key, very vital to being successful, to gaining a lot of money. You can do the math all you want and say, if it gets to $100,000 and I'm holding, 10,000 shares, I'm making so much money. But that math is so difficult to take in. It's like going to the a shoe store when it's getting released, or going on Black Friday saying that you're going to get a TV. It's so tough to predict whether you are going to get to that point, because you don't define where the peak is. So anyways, let me know what you're thinking about this. We didn't really have the best day with AMC, but let me know exactly what you're thinking. Make sure you guys hit that like button, hit the subscribe button, hit the notification bell for more videos like this one. And if you want to check out some of the links in the description, go ahead and do that. But I'm going to go ahead and get out of here. I will catch you guys in the next video.